Welcome back. It's to the Profit Point Show, and I have in the studio Bruce Omodium, my able stock market analyst, the person that is so much in stock, so much in love with stock. I'm sure he probably loves stock more than his wife.
No, I disagree with you.
Of course, you will disagree. Of course. You want to go back home now?
Only that stocks, to me, people say it's very risky, but I think that's a simple way to make money if you know how to play the game.
Yes.
It's about knowledge and timing.
Yeah.
And when I had some of my professional colleagues saying you don't time capital market, I shake my head and say, why? Everything in life is timing. Even the Bible said that there's time for everything. And also the people of Isaka say they prosper because they understand timing and season. That means in equity investment, you must know when to be in stock and
when you should be out. And the stock you're supposed to be in and the one you're supposed to stay away from.
But some name of long term and all those, they stay in one stock that will take them up. That stock will still flog them down and they are still holding long term. What are you logging to?
And come back and get delisted.
What are you logging to?
Anyway, let's start with a review of 2020, looking at the gainers and the losers. 2020. Now, this figure we're given is the figure as at the end of the trading day, the last trading day in December. So, is just for you to understand that it's not safe. That's the cumulative or average price. On the last trading day in December, this was the price at which they stopped, and this is what we based our top gainers and losers on. So, the stock that actually gained the most then was Nimet. Went up by 259%. That is not surprising. Nimet has been performing. Really, many stocks in the pharmaceutical sector have been performing. They performed well 2020, but Nimet has been fantastic. Then we had FTN Cocoa, agri sector too. Yeah. Nice sector. Then Etel Africa. Telecom, yeah. Then livestock, agri sector, then United Capital. Finance under financial. So those were the top five gainers for the year 2020, the last trading day. So looking at these gainers, obviously they are representative of the sectors that we actually chose 2020. Exactly. When you talk about pharmaceutical sector because of this COVID and the vaccine and demand for their products, then FTN Cocoa, agri sector. Sure. People always eat anyway, and government's policy also favored them. Yeah. Then Etel Africa, telecoms, and of course livestock, still agri. So what do you have to say to this? This is not surprising to me though. I would be shocked if they were in here.
No, they are not surprised, but the good thing is that investors that know how to play the game has really smiled to the bank for the year 2020. And I would say kudos to CBN, their monetary policy. That's what really drove the market 2020. Considering the outcry of COVID-19 globally, but stock market suffered hit immediately. The news came to Nigeria in February. The market went down as low as 11 years low in March. But on the 4th of April, the market rebound. I would say since the rebound in April, the market has been an uptrend. And why? It's because one, it's not because of the economy is too stable or the fundamental is strong, because there is what we call low interest rates, and at the same time positive sentiment as oil price was recovering. And these are the factors that drove the market in 2020, and that factors are still intact as we speak now. Despite the second wave of COVID-19, everybody is shaking down here and there. I tell them, if we have survived the first wave in 2020, second wave we're having already more than 4 countries have been approved a different vaccine to take off this. But then I don't see the panicking going the way we had it in the first wave. For me, a good investor should just sit down, set your good investment goal, and know where to be. Like we just said, the sector that really drove the market were, if you look at the industrial performance, sectoral performance, the industrial goods, which is the building materials, really was most performed, the outstanding sector for the year. It gained about 90.81 for just 1 year. When you see stocks like Dangote rally in terms of price movement, you saw stock like Boa Cement on the rise, WAPCO from almost 9 naira to around 26 naira during the year. Then they are not among it, the top 5, but these are the stocks that really drove the market in 2020. Then Ether, moving from about 219 naira to 851. 851 from 200. If you are an investor that is okay, let me just stay in this Ether alone. You have made more than 400%. Investment for how many people for 1 year?
How much is MTN now?
MTN is still about 169. But that is why, as a good investor now, I'll tell you that I'm not recommending stock on this platform because you need to pay if I want to recommend stock. If you see Airtel around 851 and MTN around below 200 naira, simple advice is that this stock will move to a certain price before it slows down. And MTN has December as year end, that will pay the dividend in December. Why Airtel has as much as year end? Then that means if you are an investor, you want dividend income. Where you look at the one that is really on that is selling below the leader in that sector now, and take position and you get your dividend. That dividend information news alone will drive the price of MTN. That means it's a good investor. You want to manage your portfolio well. Such stocks will be in your portfolio to help you to play what we call defensive, so that even though when the market go against you, if you are a defensive stock like that, it will help you to manage your portfolio. If you remember when I was up, I said get this one in one portfolio as a comment, because I know it's not only just to make profit. When the market go against you, you also have to balance your portfolio. Stock that help you to protect your money is what you should buy. Like
before you go forward,
okay.
I need to go back to Airtel and MTN, because I know MTN, I mean, they're in the same sector and in real life, not off the market.
Yeah.
MTN is not performing badly.
Yeah.
So I'm just wondering what really drove Airtel to 800, because it doesn't look to me like it's only fundamentals.
No.
Is it that some people are buying up and running the price up? Because we don't want this situation whereby we say, oh, Airtel is perfect, it's beautiful.
No.
Then people will go in at 800 and the stock will come back to where it's maybe supposed to be technically, like 200, and people losing money.
Like you just said, information and education is very key in when you invest in the equity market. If you buy an Airtel at this price, what will be the dividend yield? Less than 2% dividend yield.
Of course, people buying it are not buying for
what I'm coming now, you said what is the difference between Airtel and I want to say the difference.
Okay.
Airtel has a dual listing.
Okay.
That dual listing that if you are in UK, you can buy Airtel in UK. You can even couple Nigeria Airtel and go and sell in UK. And for that, maybe that don't want to this exchange, foreign exchange, we're having some slowdown here. Decide to go into Airtel here and go to UK and sell and get their pounds. These are the factors that drove. Yeah, correct. These are the factors that drove. Not because performance now. You see, when you have a dual listing, you're bound to enjoy some favor in terms of market sentiment. But in terms of performance, if you look at the whole, our national, the telecom that has the highest network, that is MTN. They know patronage is MTN in terms of data. But because of this single dual listing is what is favoring Airtel. And for me, if you are seeing MTN below 200 naira, it's a giveaway for you to a right thinking investor should say that I need to take position here, because if the leader is selling for almost 600 apart from the one that is performing, that means it will catch up with it. And those that are looking for where to invest, I need to subscribe to them, but let me just stop it.
Okay.
Well, as we're saying about the review, I think the sector that the government really favors in terms of policy, we can see that. That means, as an investor, know that policy is part of what drives equity market anytime. Now, CBN have reduced interest rate, funds start leaving other investment window for equity, because the yield in other investment window were extremely low. But why funds are moving, capital appreciation is still in equity market, and also company that has potential to pay you the yield of 10% and above. And as we speak now, the CBN 364 days yield for Treasury bill is still 3.2 for a whole year. Then if you are making just dividend yield alone in some stocks 10%, you are far better. And you are going to stay less than 3 months from now. We're already in January, and this result start hitting the market as from what? As from March. That is less than what? 3 months. But if you are waiting in Treasury bill for 1 year, you are going to stay there, and they give you at the end of the year 3.2. But in the less than 3 months, you can make 10% from yields. That is why I see smart money move from where they can make more. That is why I say it's called circular flow of funds, looking for where there's opportunity and higher returns. That is why I say fund left all those fixed income activity were low, Treasury bill were low, bond were low. So where to equity market where there's activities, because there is policy and a part in it, funds are leaving other set of it. For me, these are the factors that when if you look at NIMET in terms of numbers during the year was positive. And knowing that, as we just said, COVID-19 really attracted our government to do that, they need to look the way of healthcare. Before now, the present government and the past have not been looking the way of healthcare. But because of COVID, there were a lot of budget, a lot of incentive to that sector, so that we're able to control, the disease and or the infection or what we call the virus, so that we can protect our people, which is good. And this sector is now, as we speak now, has come to stay. This we're going to empower this sector going forward if you're long-term thinking a long-term investor. But the number of NIMET was correct and also impressive. Only that if they paid at the end of the year, financial year was not too attractive, and also they didn't pay the previous year, but able to pay this year. For me, it's a good beginning for them after we have seen the part of policy on the company. Then the next one there is FTM Cocoa. FTM Cocoa just move, I would say it just market ESA and sentiment. This is a stock that the rumor in the market that there's a foreign investor that have entered into the company. Yes, they've not made it official to speak. the price are moving from 20 kobo to even as high as 80, 89 kobo, just because of, in the equity market, the sentiment is what drives the market, that demand and supply. When there's too much demand in stock, price will rally. And so if the share in issue is not much, the price will go up. That's what, not that there's no number to support this price as we speak. As if you are playing this, you have to be very also smart too. If not, you will cut there, you'll be waiting. Then the next one there is Ethel. I told you the reason why. I told you the reason why Ethel was up for the year. Then livestock in 2019, turned to positive in terms of performance. Their numbers were up and it closed good positive in 2019. But for 2020, from first quarter to the last third quarter, we have seen it's a positive result looking up. Then investors have already started. In the last 6 years, they have not paid dividend. With this number, this company might likely start paying dividend at the end of 2020 financial year. Investors are taking position. And knowing that also, as you said, government policy is also impacting them because they have a one-digit interest rate they are paying for that. So these are the factors that are impacted. But for UCAP, we know that UCAP, since after they do their bond of 100 billion, the performance rate this 2020 was up. And knowing that they are into investment, knowing that into investment, capital market is up, you expect that their performance should also be up, because that is where they play. And for me, when I saw the result, I was not surprised because first quarter, third quarter was also looking good because the market was also up with it. But apart from the first quarter of the year, where the market was a bit shaky, and because of the news of COVID-19. In January, first quarter, in January 2020, market was up, but in February it came down, and March before it picked up. That is why we say that for first quarter the market was a bit bad for investors. But for second quarter, the market moved opposite the economic trend. The economy was sick, but market was heady.
Okay. There was a time that T-bill was like 15%, 17%. I mean, people just literally just collect fund and just sit on the chair and just sip wine.
I call them armchair
fund managers. So, and because T-bill, treasury bill, bonds, alternative financial investments, they're low.
Yeah.
So money needed to go somewhere, and that's the stock market. Yeah. Do you see any difference in alternative investment this year? Do you see any difference in bond, T-bill going up? Because I feel or perceive that if we go back to the era of TB going to 15, 16, 17%, fund might begin to move away from stock market.
Naturally. I said that fund will look for.
When do you think the bond and stock market is a case of brilliant students are not around?
Yeah, actually, for me, I see that the year 2021 will be a miss. Dicey. Why I mean so that for the first quarter of this year, because of expectation of the full year earnings for 2020, market will keep on oscillating, profit taking up and down until the end of this earnings season. That will be in April. Okay. But another thing that will support the market, if CBN will leave the interest rate low as it is, or even bring it lower to zero. Why? Because there's one thing CBN want to achieve. They want to revive the economy. They want the recovery to come speedily. If that, the cost of funds should be cheap. If that remains low as we speak now, that means market will keep this trend. But if there's any little change in monetary policy that's coming up around the 3rd of this January, market will pay for it. But if the thing is left unchanged, and we'll see positive indicators in terms of, I believe that if you look at the what we call purchasing manager index for the month of December, was a big decline. We're also gone to contraction. We're out of contraction in November. We're back to contraction in December. Then in this January, at the end of January, if there's a little improvement, that in January is always a dicey month. We call January effect in terms of if January is okay, I believe that at the end of this first quarter in 2021, that we're able to come out from recession. Then that also it will be a plus for the market. But if we go deep again, but for me, I see that activity we are seeing might likely just come out slightly, either 0 point something or still remain around 1 point something, which is okay. We know that by second quarter this year, we're out of recession. But CBN wants us to come out of recession by fire, because that will ginger the economy, unemployment will reduce, and people purchasing power can come up. Because as we speak now, as far as inflation is high, no matter what you are earning today, you are just working for the people that are selling, because price of goods are high because of they jack two important things up at the same time. But if there is productivity, gradually things will start coming down. I think that's what they want to achieve with leaving if they will leave the interest rate low as it is, or even make it zero. So in US, some countries, the interest rate is zero.
It's zero. Yeah, but it's funny that even at this low rate, some people are still buying T-bills. Actually, some people keep on buying T-bills.
No, why do people buy T-bills?
Safety.
Let me tell you, why people buy T-bills. I will tell you that if somebody like you and I that will struggle for our fund, we won't put our money where I have to wait and make 3.2%.
So maybe
no matter wait a comment. No matter how safety conscious you are, you know, they say, you know, even though you are buying dividend stock that you know that they give you minimum of 5%, 6%, there's no risk there. You can see they can pay good dividend. Fine, but for me, I'll tell you that people, let me not use it on the air. People that put money in TCB now,
I know what you want to say.
Are those I know that if you are not the type that you are trying to grow 50 million to become, you know, 150 or to become, you know, 100 million, you are the type that even though you have just billions, you don't need to remain there. Let it be safe.
Yeah,
safety.
Yeah, they don't need much.
But people want to grow their own.
Yeah, some people want to grow their own.
And that's why you know investment world is for you to multiply. It's where you create wealth. That is equity market for you. You create wealth there, but people are not ready to create wealth through capital because they don't want to take
they have the wealth.
They don't want to create
already. They have the wealth already. They just the one they have. They just don't want to risk it. Maybe because even the least risky stock on the exchange.
There's the element
not
of
as safe as treasury bills.
I agree with you,
so
but when you take one decision, what you can always make money.
It non-wise. We just have different investment decisions. Bruce. All right, let's talk about the worst performing stock 2020, and this is based on the opening price January and the closing price December. So just two absolute figures. So top in the list is Habico, lost 70.66%. Then Omatech, then NCR, Mansard Insurance, Afromedia. Looking at these five, I think the one that I feel is off here is Mansard Insurance.
Yes, others are for
others me. Are, you know, I was telling you before we came on here that should some stocks just give back the monies to shareholders and just become privately owned, because most of them don't release results regularly. They don't pay dividend, price is down, so the shareholder is losing, and some of the stock is probably going to be difficult for you to sell because most people are not buying.
Yeah, actually, when you see such stocks on the exchange, it's not really for investors to make money. Some good fund managers or call them business analysts can also take advantage of the low price, buy into this company and change the fortune. And it's easier for them.
Buy the company in real life.
Yes, and it's easier for them when it's a listed company. That means they can
just buy the stock.
Yeah, they can become buy 50% or 100% or 80% and turn the company around. Things start coming up. Like I remember, if you listen to Warren Buffett, I tell you that you look at a company that has potential, that even there's nothing there, that if somebody can move into that company and turn it around, he invests and waits, and he made hell of money out of it. I think all these companies, they are presenting some potential for people that are according to buy in. If you look at what they are into, the way you can modernize
Omatech isn't too computer
technology. And this way is driving the world. It's driving the world today. That's why I see this kind of stuff for me. If you have fun and you know your onions and you know what you are doing, and you can, these are companies that you can buy off, because as you speak now, what is the price, the share price? Even though you want to buy from the floor, you move the price, even not from that to to around. For 1 naira, you've accumulated what you want, you take over and turn around the company. And this is why I tell you that.
That's hostile takeover.
This is why long-term investors like Warren Buffett, they're working that, where can I enter and turn it? But then also you create job when we are doing such thing. But now this company, as they are struggling, I'll tell you, if you go there, I'm not using number to know whether they're performing well or they're just on the exchange. For me, this is also the work of the regulators in the market to follow up on this company and know what is happening. For Mansard, the only company I see there that, yes.
Yeah, shouldn't be there. It doesn't look.
Yeah, Mansard gave, is not 17 for 7 bonus, and when they mark the price down, after giving bonus, there's what called price adjustment. Okay. And that come as low as almost 64 kobo. When then it has to start picking from there, and people took advantage to buy that because they are making money already. But I'm going after also they plan to do share reconstruction in Mansard. That will also bring the value up again. But what I have observed in Nigeria, I always tell people that call me that share reconstruction in Nigeria has not favored shareholders in Nigeria. The only company that share reconstruction that favor investors is Stanbic, correct? And the first company that did that again, that I see they are thinking of is analyzing. Can see that the price is also coming up until you get to the price before we now say, but others are even selling far below the price they projected. For example, a stock like a Unity Bank that projected to around 5 naira. Today struggle around 64 kobo. Or so that means shareholders.
Unity Bank with the negative shareholder.
Shareholder in that kind of company now will be complaining. No matter how Jewish share position will look like, we have to be very careful. But for Mansard, I believe there is potential because of the fear I have in Mansard. I will say it again. Mansard and ICO Insurance selling their backbone. I say backbone because any insurance company that does not have pension fund as backbone and all that, as where they manage fund, I think you're standing with one leg. But now they are selling off their pension. And on that, when program, I say you have to be very careful. You can make money on the move, this short-term movement, but if you're a long-term investor, you have to rethink when you are taking position for in ICO and also in Mansard.
All right.
For a long-term investor.
We have a few minutes to go, so let's just introduce the preview into 2020. We continue next year.
Okay.
So stock market 2020, what do you see? And you better be careful what you say, because I'm going to hold you to it.
No, if you go to our history, if you go to our history in invest data, all our prediction to a level would give a glory has been to when we said that the market in 2020 will close positive. People were asking me, what do you see? Like even in my last training, I said it in September. They say, what are you seeing? That I say, look at the market. The way the market was in negative of 18 point something percent in March this 2020, but it came up to around with a 50.03. It tells you that the market, for me, I see that 2021 we expect a mixed market and also a dicey market. I said earlier that for what the factor that drove the market in 2020 are still intact, because we're still having a low interest rate as we speak now. Then until after the MPC meeting, if there is anything adjustment up, it will be against it will be against the market, because the fund will start leaving the equity market from there. But if the thing is left unchanged, and at the same time, then the economic indicators start looking up to support the market. But what is driving the market is not only economic fundamental, it's purely liquidity and sentiment, and they are still there. Unless the smart money start moving away from equity market to, but for now, I don't see any investment that is attractive as we speak now in this first quarter that a fund manager want to move money away from equity to go now. Yeah. But that means they have to wait to get the dividend to see this earning season before they start. But I tell you, immediately after earning season in April, I expect that the market will pull back to wait for another factors or another trigger going to the. That's why I say it's a mixed market and also a dicey market. But with this second wave of COVID-19, there's people are afraid, but I still say that people should not be afraid. If market rally when the thing hits Nigeria economy, and now we have vaccine. I said earlier that many countries have approved. The rate of approval is on the high side. And also the distribution has commenced already. I don't see that the second wave will have much impact if managed well. Only that problem. Fear and also not preparing, we will say, but if managed well and we're prepared, we're able to get the vaccine. There are some countries I know that as we speak now, they've injected about almost 1.5 citizens in their country. About that means they are serious, but here we're still planning when to buy, when to buy, and then when to import it.
Don't worry, you will get the Ambrose. And don't worry, in your defense, you should also know that nobody guarantees anything in the stock market.
Yeah.
Nobody guarantees anything in any investment.
Only that you need to do it wisely.
Yeah, just do it wisely. Yeah. Thank you very much, Ambrose.
Thanks for having me.
This brings us to the end of the stock market segment. We're going to break, and when we return, we go into the business segment where we talk about business failures and what to do to not fail in your business this 2021. All of this after the break. Stay with us. We'll be right back. Welcome back. It's to the Profit Point Show, and this is the business segment, and we will be talking about business failures and what to do to prevent it. This is 2021. 2020 was not a very palatable year, but we pray that 2021 will be a compensation. But then we also need to take steps to ensure that the businesses that we are into does not fail. I have in the studio Alhaji Wasiu Olaleye, the President, Ogun State Chambers of Commerce, Industry, Mines and Agriculture. Good morning, sir.
Good morning.
Thanks for coming on board, sir.
Good morning, and nice to meet you.
You too, sir.
Yeah.
All right. So we want to talk about business failures, and we first need to clarify, what do we mean when we say a business is failing?